With another 0.25 interest rate hike from the US, and the clear takeaway from yesterday's speech was that there is no cuts this year, I think we should be getting ready for the worst. In this video, we're going to be jumping down into the charts for Bitcoin. We'll be taking a look at not only the price action charts, but also the on-chain metrics, giving our thoughts and opinions on what the data is suggesting to us. As we get into this video, if you find it useful and informative, then why not go ahead and hit that like button? Do appreciate that. If you're new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at 𝗕𝗘𝗪𝗏. If you haven't yet joined us in Discord, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's get right down into this one, right? We're going to be taking a look at a few different things. We've got smart money concepts. We'll take a look at what that's suggesting to us in a moment. We'll also jump down into some Elliott wave theory, see what's been updated there. And then we'll take a look at some key areas of support and resistance. But I think before we get into all of that, let's jump on down into the on-chain metrics, okay? So up here, top right-hand corner, like we usually do, we have inflows, outflows, and the difference between the two numbers. We've seen a significant surge with outflows in the last 24 hours. So we can see that we've had 2.5052 million going onto the exchanges since the 1st of January 2022, and 1st of January 2023. And we can see the outflows of 2.4689 million coming off the exchanges since the 1st of January 2023. Okay, and so therefore the difference is now 36,000 more gone onto the exchanges than has come off. This was previously about 48, so we can see that there has been a significant reduction in the amount of Bitcoin that is remaining on the exchanges. This can be for a couple of different reasons. One, you could see accumulation, you can see demand soaking up some of the supply. Alternatively, you could also see this as potentially fear around some exchanges. I'm not aware of any reason for that right now, so I'm going to assume that this is actually demand soaking up some supply as Bitcoin retraced a little. Okay, so we can see down here, there's the line graph of the balance of Bitcoin on the exchanges has been steadily increasing, and it's got a slight little dip right here. This is basically over the last couple of days. We can also see that the net change difference, 30-day average bars here, over a long period of time, how Bitcoin has been flowing onto the exchanges. And you can see there's a slight dip here in the last 30-day average bar. So we're not going to talk about the HODL wave, so I don't think there's anything too much to talk about that. It seems to be reasonably strong at the moment. Let's go ahead and move on into a line graph for the inflows and the outflows. And you can see the spike right here in the yesterday's data for more outflows than inflows. 53,000 Bitcoin has flowed away from the exchanges, where only 40,000 Bitcoin ended up going onto the exchanges. So you can see that there was a little bit of panic selling, but I do think that actually the reality of the situation was that a lot of the Bitcoin was already being loaded up onto the exchanges ahead of the Fed rate hike decision. And we can argue that 0.25 is bottling it. They should have, of course, gone much higher, in my opinion. They're just kicking the can down the road for a longer period of time. That was also something that came out of yesterday's speech, which was basically it's going to be long drawn out. No rate cuts this year are expected, and basically they're going to monitor the situation and continue kind of smaller hikes over a longer period of time, slowly chipping away at inflation. Essentially, that's kind of the takeaway that I got from it all. Now, essentially, from that kind of strategy, it does open up to a lot of risk as well. So they could potentially change their mind on that as well. So we'll see how things kind of play out over the next few months from the Fed side of things. But I guess the key thing is that there's no pivot, there's no pausing, and there's no cuts necessarily. Then I guess a pause could potentially be something that they might do. But for the most part, they're looking at just hiking 0.25s. Continuously by the looks of it. So it's interesting. So what does that mean? Well, it does mean that essentially we saw a lot of people maybe pricing in a pause or a pivot and a lot of that nonsense, which was just, I don't think, really something that was going to be possible. There was a lot of stuff going on with the banks, so lots of wild speculation that they were going to do this to try to save the economy. But essentially, I think if they didn't do a hike of some kind, it was going to be worse. I still think they should have gone 0.5 or grown a pair and actually went 0.75 just to really turn up the heat and get this job done faster. But instead, they're going for the slow grind. A lot of people are going to lose their jobs. Lots of unemployment rates going to increase, all that kind of stuff that comes with high inflation and high interest rates. So interesting. And so we can see here that there was a withdrawal of Bitcoin from the exchanges. And the other thing that was spoken about a lot is the banks are safe, right? And that's the message that they really want you to believe is the banks are safe. You can start withdrawing your cryptocurrency back to the banks, right? Get it back into fiat. That's kind of what they want you to do. maybe there's pockets of that within the high net worth individuals and whatever, but I don't really see that terribly too much as an important metric within the crypto space. It's a reason that people are here, and it's because they don't trust banks. Let's move over to the wallets, right? This is where things start to really get interesting. So when we start checking out some of these wallet counts, right, there's like the number of wallets that have over 0.01 Bitcoin in the case of Bitcoin Dust here. We can see that these guys did actually get a little bit of a shakeout yesterday, or at least over the last couple of days. The price feed data here, I think, is not linked up to the correct time stamp. I need to check that because price actually went down yesterday, not up, whereas our actual wallet count data is correct. So I think I need to offset the or just get the correct timestamp associated with the price action here, because I think it's one day out at the moment. That being said, we can see that there's a slight dip in the wallet counts here yesterday. This is basically now 11,676,155 wallets. Okay, so we can see that it has come down just a fraction there, a little shakeout. And now when we come over to the retail size wallets, we can see that there's basically this idea here that they sold when it was $22,000. They were buying when it was $24,000. And then now selling again at $27,000. You can see that there was a shakeout up here at $22,000, and they started buying again at $27,000. They starting to sell again. Typical kind of retail investor stuff going on, overreacting to price movement. The high net worth individuals, though, as I said, they are the ones potentially flowing back to the banks now, and you can kind of see this, the surge upwards here, and now they're coming down quite a bit. So we did peak out at 156,118. We're down here at 155,815. So we dropped down, what's that, just a few hundred wallets? Yeah, a few hundred wallets that have over 10 Bitcoin each per wallet. So we can see that the retail investors are kind of coming out of their positions a little bit here, except not the smallest size, like the Krill side at 0.1 Bitcoin. That's not too much. We saw a bit of a dip, though, when it came to the 1 Bitcoiners and the 10 Bitcoiners, so these guys. Now, when we start coming up into the larger sized wallets, this is where things really start getting interesting. We can see that the number of sharks has decreased dramatically. Now, these guys are the traders, right? These guys follow the price action. I spoke about this a few days ago, essentially where they bought up in December a significant amount and a big surge in the number of wallets that had over 100 Bitcoin in them ahead of the actual pump to the upside. So when we were down at the November lows, these guys were accumulating like mad. And then they rode this all the way up with the DXY dropping the way that it did. And I think these guys are traders in the way that they operate. They follow the price action really, really well. They don't always get it right. They've made a few mistakes, but they've nailed this one so far. And I think what they're doing here is basically actually looking at the Forex market. And I think they're actually trading on Bitcoin based on DXY movements and dollar value and stuff like that, at least most recently, and because they have been timing this thing impeccably well. Another clear example is right here, buying a significant amount at $21,000 and then riding it up to here, right about here, where they start selling at $25,000, right? Yes, it went up a little bit higher, but they do need the liquidity in order to pull back out. So looking at it, they're actually following this pretty well. So the traders are doing a pretty good job at trading this current market with Bitcoin. These are professional traders. 100 Bitcoin is not a small fund, and so just bear that in mind. Okay, these guys are grabbing a lot of liquidity out of the market. They've been kind of steadily reducing their positions since $16,000 Bitcoin. It would appear just around here. 21,000 is probably more. Yeah, 21,000, sorry. $21,000 Bitcoin. And they've kind of been slowly grinding their way out as Bitcoin's been providing the liquidity for them to do so. Bearing in mind they bought at like $15,000, $16,000, they can see very significant gains on their holdings. So you can see even up here at $22,000 they were selling, up here at $21,000, up here at $23,000 and so forth. So they're slowly kind of like grinding their way out and recently taking more profits, coming out at 25K. Now, from the whale side of things, this is the 1,000 Bitcoin or more wallets. There was a significant surge to the upside where we saw 2,024 wallets going from the low of 2002 to 2024. And then, of course, we can see no change day on day. Yesterday, we're down here at 2019 wallets. This is looking pretty good and a positive move. But I am concerned that if the retailers stop selling, there's not going to be the Bitcoin for the whales to be buying, and therefore, unfortunately, price is probably going to have to continue to tumble down before these guys can continue to purchase. Likewise, no change with the Kraken size wallets. So For anyone that is new, I'm going to show you what happened in 2018. In 2018's bear market, you had retail investors, these one Bitcoiners essentially, being told that the bottom was in over here. Then they were buying, right? They were buying up. You can see the wallet count's increasing. Okay, and then this dip comes here. It's just a dip. And then a new bottom comes in. Okay, it's okay. The bottom is definitely in now. You can buy the dip. So they continue to buy the pumps. They continue to buy the dip until a new bottom is in, right? This is the third time these moon boys on social media were saying the bottom is now in, it's fine, it's just a dip, we can continue buying, and they continue doing this until they get to this flat period right here, where the price action starts to come down really steeply and fear seeps into the market. No, it's not. We are essentially going down even lower. We should start thinking about selling our Bitcoin because there's no recovery in sight. So you can start to see that they start to sell. The wallet counts start to decrease during this flat period right in here. Okay, and they come all the way down towards this little peak just down here in November. The actual bottom was in December, and they actually were buying that bottom just a little bit, but it was not the retail investors that started a bull market, despite what retail investors want to believe. Instead, if we take a look at the whales, you can see that during this flat period of time is exactly where the whales started to accumulate, because there's Bitcoin that's being made available to be purchased at a discounted rate. For example, retail investors were buying all of this up here, and then they were selling down here. They were buying high and selling low. Okay, and that's exactly what the whales want. They sold the Bitcoin on the way up. You can see the whale wallet counts going down as price goes up. Okay, so they're selling into the pump to the upside. Then they don't really participate too much. They kind of just, bounce around down here, sell Bitcoin to the retail investors. And then as this flat period here starts, and you see significant selling pressure from retail investors, you see the whale investors starting to come into their positions, right? And you can see this surges right up. And you might be thinking, well, if whale investors are surging up, why did the price go down? Well, they always buy the dump, right? They buy the dump, but they sell the pump. You can kind of see this here. Wallet counts go down as price goes up, and wallet counts go up as price goes down. Okay, it's all about liquidity. They have to sell into a pump, and they have to buy into a dump. And then, so if we think about retail investors having to come out in order for larger institutional investors to come in, and then we start thinking, okay, well, that's cool. Why do we still go down over here? And it's because of the Kraken size wallet. The Kraken size wallet is the master manipulator of it all, if I'm being brutally honest with you. And we can argue whether or not the Kraken size wallet is or is not a cold storage device for a whale, market makers, whatever. And essentially, I don't think this is exchange-based wallets because there's not a huge number of these. I think these are wallets that are not exchanges, although I cannot seem to get that verified as much as I've tried. So what we can do here is we can, of course, acknowledge that there's a significant number of wallets back in 2018 that had over 10,000 Bitcoin in them. And what they did is they flooded the market with the supply. And you can see this happening right down here. Now, the question you'd have to ask yourself, and the reason that this is really obvious as manipulation, is that these wallets were accumulating during this bear market. Okay, they were accumulating heavily during this bear market. Why, when the price has come down into $4,000, would they just flood the market with Bitcoin? Why would they do that? Why would they be buying up here significant significant amounts of Bitcoin at higher rates, such as $10,000, $8,000, and so forth, buying a significant amount more during this kind of surge up here around $7,000 to $8,000, only to then go ahead and drag down the market over here into these lows? It's all about shaking out retail investors. So by doing this, they're able to really pull down the market in terms of the price of Bitcoin, create maximum amount of fear, and create the transfers of wealth between the retail investor and the institutional investor. So this is a clear manipulation, and I talk about this all the time because this looks like where we are right now. Okay, we can see that during this bear market, this sized wallet, this Kraken-sized wallet, has just been accumulating. And are we actually just waiting for that moment where they flick a switch and the supply just drops on the market, dragging the price of Bitcoin down? I don't think it's going to happen, though, until the whale investors start buying. And at the moment, you can see they are not participating because they have uncertainty over the actual economy at the moment. And until they are actually participating, I don't think retail investors should be getting too carried away. As you can kind of see, they've been buying up every dip known to man. Every time that's the bottom, that's the bottom. Now that's the bottom. They've been buying, right? The same story year on year on year on year. The same story is always told, right, and shielded from these kind of, I guess, moon boy influencers on social media. We all want a bull market. We all want Bitcoin to go to 100, 200, $1 million, whatever, right? But there's a right way of doing it and a wrong way of doing it. You can't just jump on every pump and say the bottom is in, and draw a couple of fancy trend lines. Essentially, at the moment, our on-chain data suggests to us that there might be some small time frame stuff where we have this kind of move to the upside. We've seen significant moves to the upside so far, above and beyond my original expectations, admittedly. Okay, I'll take that on the chin. I can quite comfortably say that, yeah, it went up higher than I thought it was going to be going up higher than. But essentially, I was expecting a bear market rally. It just pushed a little bit higher than I was expecting. Now, one of the things that we don't want to trick ourselves into thinking is that this move to the upside within our data, right, is actually a signal of a bullish market when the on-chain data doesn't support the idea of a bullish market and the economy does not support the idea of a bullish market. And if you didn't get that from the Fed yesterday, and I think you need to re-watch that, because there are no cuts coming this year. There is no cuts, that meaning there's unlikely to be a pivot this year. Okay, so considering we are still in Q1, about to go into Q2, that should give you a pretty bearish outlook, right? It shouldn't be giving you a bullish outlook. Now, don't get me wrong, 0.25 seems to be bullish at the moment because people don't have much faith in the way of the banking system. But if that does stabilize, that issue stabilizes, then there's going to be a huge incentive to be in risk-off assets, or better still, just earning an interest rate from the bank as those interest rates increase. So we've got to think about where the market might be taken for things like Bitcoin, right? So let's go ahead and take a look at our smart money concepts, right? Smart money concepts here is basically giving us a bit of a bullish outlook on our daily chart, okay? Now, I don't think this is going to necessarily be long-lived, but nonetheless, we should acknowledge the positives when we see them. So the positive here is that we have had a change of characteristic from bearish to bullish on the daily chart, okay? This was confirmed when we closed the candle on the 17th of March. Now, we have a weak high, meaning that we can still push up higher, and we have a strong low, unlikely to push down lower than the existing November lows according to Smart Money Concepts at the moment. Okay, so other takeaways here. Fair value gaps. This one, this one, this one, and this one, right? There are 4 of them on the chart. Equilibrium is also right down here, sandwiched between these 2. So the thing with these fair value gaps is they're created from imbalances in the order books. Basically, there was so much buying pressure here at this low end price that there wasn't a sufficient a number of sellers, right, selling their Bitcoin in this range to the people who wanted to buy it. So the buying pressure was too great. Therefore, price jumps to where the supply is, or where the liquidity is, where the sellers are. And as such, you have this gap that gets left behind. They call this a fair value gap. It's actually just created from an imbalance between your orders and your sellers, okay? Or your buyers and your sellers. Now, when you see this, it's usually driven from a big fund, right? A big amount of money comes into the space that outpowers that of the sellers, and it creates this kind of gap in the market. Now, these gaps, they have a tendency to get filled out, meaning that price likes to come back down to them. Now, it can take a long time to happen. We've seen these things stick around for 2 years before they get filled, but they more than likely end up getting filled. So can't time it, but we can say is that price will eventually end up gravitating back down towards these. Now, on the daily chart here, this is 19K, and I think that would be a pretty healthy correction. It's not really coming down into these lows, but I think 19K would be a nice healthy correction. And it wouldn't change our characteristic either, because we'd stay above any of these kind of key areas as well. I would be a little bit concerned about this one down here. I guess this would be a potential change of characteristic if we were to come down lower than the 19.5. We'll have to keep an eye on that. But essentially, even these ones here with the equilibrium, these are all fair game in my mind to kind of see us moving back down and having a nice healthy correction for it. You can see that we're overbought on the stochastic on the weekly and the daily, and some of these other time frames are also moving along quite nicely. Now, from an Elliott wave theory point of view, we're pushing up higher towards kind of critical moments, such as 32,900, which would be interesting to hit. Like I said, the prolonged approach from the Fed could mean that we end up with this kind of mini move upwards a little bit higher, maybe pushing up into the $33,000 range, and then getting rejected. And my big issue there, if I come over to this one here, my big issue is that what this potentially would look like would be a giant kind of A, potential B, C structure taking us down to lower than 10K at some later date, meaning that you kind of had this, I don't really want to call it bear market, but a really significant a bear market rally. So not a bull market, but like a bear market rally, a really significant one, taking us into those highs. I would be very I guess, against the idea that this is going to be a significant run where a bull market starts, but I'll take any positive I can because I do want a bull market to be here. I just do not think it's actually something that we should be getting too carried away with when we don't have the data to support it yet. But nonetheless, I do like the idea of a bullish market. Just don't think we're there at the moment. So when we take a look at this, our current structure is for a Z wave, which because of our recent moves up higher, does raise our targets a little bit, right? We're talking 11.5K now to about 18,200, right? So it's positive that we're moving the goalposts a little bit on the low side, protects us. A Z wave would be my preferred option because it gets the band-aid ripped off quicker. However, if we do push up towards 33K, I think we're going to just end up with a prolonged bearish scenario and much more pain further down the line and deeper pricing. So short-term gains, long-term pain. And really what we want is we want long-term gains and short-term pain. So I want the Z wave over the kind of idea of an ABC structure. And in an ideal world, I'd like to just come back down, not have new lower lows, and continue moving up in a bullish market. I just don't see the data there to kind of support that. So ultimately, from an Elliott wave theory point of view, this is where I want it to go. I would like to look at the lows for around kind of 13, 14K. I think they would be very nice and healthy. However, realistically speaking, we'll have to see how that kind of plays out. At the moment, we'll take the positive, so it does look like there's still room to the upside here on the daily chart, but I do think it's short-lived. I think essentially we do have to come back down and fill some of these gaps out. Testing the ranges around 20K would be pretty healthy, in my opinion, as a bare kind of minimum. I do think that we're right up here in the supply zone now. As you can kind of see, there's something we drew out before, previous demand range, turning into a supply range. And for the most part, it does look like that's holding up quite well. Key areas that we've been talking about previously are still all valid. We found support on the previous all-time high from here. This basically being 19,798 USDT. Below that, obviously, we failed to kind of hit that low of around 14K. That's the one that we were kind of hoping for. We obviously hit and found support briefly down here. Just around that kind of 15,476. So it's interesting. We'll see how these kind of things play out. It does look like this should be the area of rejection. So a pullback, kind of filling out some of those fair value gaps, I think is something that we should consider. But let me know what your thoughts are in the comments down below. Really interested to canvass everyone's thoughts and opinions on the price action of Bitcoin. Do you think that, the on-chain data doesn't know what it's talking about? Do you think that the whales have made catastrophic mistakes and who cares? We're going to the moon. Let me know in the comments below. Or do you think actually, it's just dumb money being dumb and basically FOMOing into something that just simply isn't going to be sustainable long-term? Let me know your thoughts in the comments below. If you found this useful and informative, smash the like button. Do appreciate that. If you're new, subscribe. And if you haven't yet joined us in Discord, check it out. Linked in the description below. Until the next one though, guys, have a fantastic day.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.